Okay, so last week, busy week, big week for the US dollar. Certainly, we had the non-farm payroll. Now, for those of you that don't know, non-farm payroll basically is the job numbers. The job numbers that come out once a month, normally the first Friday of every month. Last time it was in fact the second Friday, but there you go. So yeah, it's a big number last week because obviously everyone's talking about what the Fed will do in terms of their bond buying. Are they going to start easing back, commonly known as tapering? And this number was basically widely looked at. Fed Powell himself said that this number is really important, that if it was a decent number, then he doesn't see any reason why they wouldn't begin tapering at the next meeting. And indeed, the number was reasonably decent, came in about 194,000, although a lot lower than what the market was expecting. Still a decent number, but also the revisions from the previous month came in stronger than expected as well. So all in all, quite a good job number out of the US. And since then, the US bond yields have been rising, now up at around 1.6 at the time of recording. Bond yields basically indication of where interest rates are going to go. And with bond yields pushing up, you're seeing the US dollar push up as well. In fact, at the time of recording, I'm just seeing now that the dollar against the Japanese yen, we're hitting 3-year highs as we speak. So the dollar is going well bid at the moment. The other side of that is seeing a weaker euro. So a weaker euro basically as a result of the stronger dollar. Now we're also seeing some strength this week in the commodity currencies. That's the Australian dollar, the Canadian dollar, New Zealand not doing too much. Now the Canadian dollar is basically driving higher on anticipation of rate rises out there as well. They've already began their tapering, as you may or well not know. And also oil prices are still pushing up, pulling back a little bit, but still very strong oil prices, and that always does support the Canadian dollar. And the Australian dollar is pushing up as well, as maybe Australia starts to come out of lockdown. Commodity prices are strong, which helps the Australian dollar as well. So the commodity prices are strong, the commodity currencies are strong. On the other side of that, we've got the low yielding currencies. Now currencies like the Japanese yen, negative interest rates there, negative interest rates in Switzerland and in the Eurozone as well. Those currencies are being sold this week. So there's a clear case in the currency markets, at least, of risk on. Commodity currencies getting stronger, low yielding currencies getting weaker. That is not filtering through into the stock market just yet. It is closed in the US today. Maybe we'll see some follow through later on in the week. But the currency markets are certainly positioning themselves for a risk on week. That basically means maybe the stocks want to push higher. Okay, so now let's have a look at our Forex forecast. Now you can access this report by